what's up everybody? This is Justin Daniel Finance. I am Justin Daniel and thank you so much for tuning into the channel today. Really appreciate everybody being here because today I am going to talk about a company that I think is just absolutely fantastic. I'm really excited about the company and I think that it has a ton of growth potential. It's in an exciting sector and I can't wait to get into it, guys, but just real quick, gotta say, if you do find anything of value here in the video today, I would tremendously appreciate if you would go ahead and hit the like button, and even more so, hit the subscribe, and please help me get to my goal of 1,000 subscribers by June 15th. Now, with that out of the way, let's get right on into it. The company that I'm going to talk about today is called Desktop Metals, and the ticker symbol is DM. This is a company that went public via a SPAC recently, and for those who don't know what a SPAC is, it just stands for a Special Purpose Acquisition Company, and basically it's another means of bringing a company public. Just kind of starts off by raising a pool of cash that then is used to go and find a good deal and kind of take that company public through a reverse merger. So this was one of the ones that I think was a really good company. And while SPACs were just doing tremendously for a period of time there, it became oversaturated and it became time to kind of weed out the winners and the losers, in my opinion, out of all these SPACs, which ones are really good companies that have a lot of growth potential versus ones that maybe are not quite as good. So that's what we're going to talk about today. And now this particular company, Desktop Metals, I actually did swing trade it at first. So I originally became aware of the company back in November and I bought in around the $11 range, I think, just a little bit above $11, and that was in November. And then I sold later, and I think it was early January, for, you know, not quite 100% return, but almost 100% return. I think it went up from like in the 11s up to close to 20, and I executed that because look, when you can double your money within a month, you know, that's obviously a really good thing. Now the stock did go on to even go up to about $30. In fact, I think it went over 30 in February, and now is trading back down around, I believe around the $12 range right about now, which I think is a good price, and I'm going to get into the reasons why. First, let's talk about what the company is. This is a company that's in the 3D printing space. So 3D printing, otherwise known as additive manufacturing, is something that I think we're all aware of and can kind of feel that this is a new emerging technology that's really going to potentially revolutionize manufacturing and kind of allow, you know, companies and even individuals to print a number of different types of things and widgets and parts and pieces, and I think there's a tremendous amount of potential of what can happen. And it really feels like we're on the forefront now of this becoming more and more of a reality of being a technology that's adopted. So just like anything out there, cell phones, computers, televisions back in the day, there was a certain tipping point where it became more and more accepted mainstream. And I think that 3D printing is getting close to that point. While it may be the case that 3D printing is going to be the next forefront of a manufacturing revolution, and we're on the tipping point of that, the question also becomes, okay, which companies are really going to emerge as strong players within this new emerging industry? And I really like what I've seen from Desktop Metals. You know, as I mentioned, I did a swing trade on it earlier, but the more I looked into it recently, I think this is a company that could exponentially grow over the next decade. This could easily be, in my own opinion, this is not financial advice, but I think this could be at 25, times. And we can get into some of the reasons why. We're going to take a look at their earnings report, their growth projections, their valuation of the company, and what it could potentially be valued at in the future. But I like what I see. I like some of the recent acquisitions that they've done. So they've definitely made a couple of good acquisitions recently. I like the way that they're looking to kind of just do a vertically integrated kind of process between the materials and the machines. And they've got a lot of different parts that they have in their intellectual property portfolio. They've got some cool machines. I think it's a legitimately good company. We're also going to look at their most recent earnings, which was better than analysts expected. So that's always good. So these are what we're going to look at today. We're going to take a look at those things. And without further ado, let's just jump right on into it. So one of their recent acquisitions was Adaptive 3D, and this helps them grow in their best-in-class capabilities to a growing materials portfolio. The transaction advances Desktop Metals' strategy to grow in the proprietary materials portfolio and expand the high-volume applications to provide to the customers. second company they acquired was Envision Tech, and you can see here they had over 5,000 customers, 10 million different parts printed, 190 different materials, and 30% EBITDA margin. So in terms of their most recent earnings report, we see here 11.3 million, which is a 305% increase year over year. We also see that the net profit margin was up 36% year over year, and cash on hand is up 457% year over year. So they have 416 million cash on hand. We see compared to analyst expectations, look at this beat. I mean, we see EPS a beat of 125%. I mean, that's fantastic. Revenue 11.3 versus 9.9 expected. 14% is what we're seeing here. So all that's really good stuff. Again, here we see the executive summary from 2021 and basically a revenue growth execution of 11.3 in Q1 compared to a 35% increase from Q4 2020. So that's cool. We also see that there's unmatched materials portfolio, which expanded from 190 to 225 qualified materials. Also, we see accelerating customer adoption, which of course is something we always want to see. Look at this, introduce the forest process for high volume printed woods. And so this is like printed wood, which is amazing because we all know what's going on with the lumber shortage right now. If everyone knows there's a little bit of a lumber shortage and the price is going up, this company can produce a 3D printed wood for home builders to use, for example. I mean, that's just amazing, cost effective and also good for the environment. They also launched Flexera, which is their brand for their desktop health, which is in the dental segment. And within that segment, I mean, they can produce 3D printed, a number of different 3D printed dental things. So that's really great as well. So here we see, this is just the growth of their IP portfolio. You can see how much it's been increasing. So this is the number of different kind of things that they have intellectual property protection on, which is always something that is really good. We see that it's increasing and that's good to see. Here's some long-term customer relationships. We got, fields such as medical, professional, industrial. I'm sure you recognize some of these names. Look, in the professional, we have Amazon, Mattel, Harvard University. Industrial, we got Ford, Boeing, Hyundai, Delta, 3M, GE, LG, all good stuff there. They say here's a library of 190 plus qualified materials, but I think in fact on a previous slide we saw it's actually up to 225 with one of the recent acquisitions that we did discuss. So they have a lot of different materials. Look at this machine, it looks super cool. So here's a little look about what the 3D printing, aka additive manufacturing industry can grow over the next decade. And it shows it getting up all the way to $146 billion total addressable market. So if Desktop Metals can take a 10% of this market, which I think is very feasible, that's over a $14 billion, revenue. And so imagine, right now they're a $3 billion company. 3.5 billion is the total market cap right now. Imagine they're doing $14 billion a year sales and they're currently trading at 3.5 billion as a total market cap. The growth potential is just phenomenal, people. Look at this. This is their growth strategy, talking about this kind of vertical integration of materials and parts and printers, and that really makes sense. Look at all these cool products that they have. So they've got all these different products, production systems, and then we talked about the wood earlier. So this is really cool. They can take sawdust and basically make it into lumber. It's good for the environment, it's sustainable, and it's cost effective. Also, look, the dental growth from Flexera, they recently got FDA approval to make these different devices for the fabrication of these different denture bases. And I think that's really great as well. So there's a lot of potential there as well. And again, just looking at the 2021 financial highlights so far, we looked at that earlier, but the financials were good, beat analyst expectations. Year over year growth is good, which is what we want to see with a company like this, a high growth company. So this is the type of things I'm talking about, their growth potential into this big addressable market. All right, so there you have it, folks. This is an overview about a really cool company called Desktop Metals, ticker symbol DM. You can see here they're in a very good space of 3D printing, additive manufacturing, and they're positioning themselves to be a leader in the space, if not the leader in the space, doing some good acquisitions, increasing their portfolio of intellectual property that they have. They've got some cool machines, they've got a vertical integration with the products and the materials and everything like that. So I like the company, I like what they're doing. Bitcoin. I like the fact that it's right now a $3.5 billion valuation, but the fact is they could easily be a $75 billion valuation company, if not more, if they're able to execute on their growth over the next 5 to 10 years. So the sky's the limit with this company. I'm personally invested. In fact, it's gotten to the point where this is my third largest position in my portfolio. So I love PaySafe, I love Palantir, and I love this company as well. Desktop Metals is a good company, so I don't give any financial advice. It's just my opinion only. So if you like that, please do me a favor, hit the like, hit the subscribe for Justin Daniel Finance. So for now, I am going to conclude this video by saying I hope that everyone out there has a great rest of your day. I hope that we all make some money in the stock market together. And until next time, this is Justin Daniel Finance. You guys are all so awesome. Thank you so much for watching all the way through to the end. And until the next video, please take care.